Hello, my name is Simi Serene and I'm the founder of Loans for SME. As a platform that helps small businesses get access to capital, we have had a first-hand experience of the challenges that SMEs are facing due to COVID lockdown. I'm pleased to contribute here to UNIDO's Building Back Business from Crisis. The restart and recovery from the lockdown forces MSMEs to bring finances on a more resilient footing. The financing challenges are all well known to us. The lockdown has aggravated these to a crisis level. In the restart of business activity, it is necessary to look forward and assess what you need to do as an MSME to set your business for success. We believe that this will involve a structured three-step approach to evaluating your business risks and cash flows. Today, when funders and lenders are increasingly concerned about the uncertainty in your business, how do you give them and yourself the confidence to run your business and raise the investment you need? The first step, we believe, is a complete re-evaluation of your business model and risks, and then trying it back to your revenue and cost estimates to project how much cash you need versus how much cash you have. And if at the end of this exercise you have a cash flow shortfall, how do you then best present your business to funders to meet this gap? And who do you go to for that loan? Well, first, figure out the finances of the new normal business for you. You also need to figure out how long you expect it will take you to get there. We address this specifically in the Prepare for Recovery module. You need to prioritize restarting the business activities that still make good business sense, postpone what is not feasible at present, and assess whether you can enter new markets. Irrespective of the time taken to re-establish, your business will look very different post the lockdown. As demand is likely to take time to pick up, you will have a challenge of operating with reduced income while your expenses continue. It is extremely important to understand what your new normal is going to be. Now, once you have worked out a new normal, you need to figure out what additional expenses you need to incur to restart and rebuild operations. This could range from masks and sanitizers for all workers, to extensive repair on machinery that was lying idle for 2 months, to write-offs on decayed inventory. So you have identified the new normal, you have figured out the path you need to follow to get there. Now you are ready to build cash flow projections for the next 6 to 9 months. We have shared a simple cash flow format that will help you understand how much money you have or whether you need to raise more funds for your business. Start with how much cash you have today and subtract whatever you need to restart operations. Next, estimate how much money you can get from your customers. If you have receivables, focus on collecting from these debtors. If it's possible to move your customers to cash sales or shorter payment periods, do that. The faster you collect, the more equipped your business will be to deal with shocks. The same goes for the expenses. If there is room to cut expenses, do it now. But do it prudently and do it with an eye on the new normal. For example, if you're a tech company, you will be tempted to move to a new, cheaper cloud service. But if that's a temporary benefit and you will end up with an inferior customer experience, you don't want to do that. Also, while it's tempting not to pay rent to save costs or defer tax payments, there is a cost involved in all of these. Tax payment delays carry an interest. Your landlord or creditors who you delay or reduce payments to may have contractual rights. So before you make these cost cuts, read the agreements. Evaluate the costs, both the monetary costs and in terms of how it affects long-term relationships. Same goes for people. And that's going to be the most difficult choice you make because it's both an ethical and a monetary dilemma. Here's what I'm going to say. If you can afford to retain staff, do that. Remember, it's going to be doubly difficult to rehire and retrain people 6 months down the line. But if you can't afford to pay everyone, make decisions that make you stronger as a business long term. You may want to, for example, negotiate small salary cuts for everyone and not fire people. That said, once you know that your business will look different permanently, and say you figure out that you're going to need 30% less people and more automation to survive, the quicker you make those decisions, the better it is in the long run. Finally, look through everything you own and everything that's owed you and check what you can convert to cash. Is there old inventory you can sell? Are there income tax or GST refunds you can chase? Every bit of cash is going to help you. Once you have fully optimized revenue and expenses, you will either end up with surplus cash, in which case, congratulations, you are in good shape. The other outcome, of course, is that you will have a shortfall, which means that now is the time to raise more funding. Where do you go for this funding? Well, if you are a business that has existing lenders, you should go ask them first. These lenders know you and your business and are far more likely to offer loan extensions and additional lines of credit. Other places to look would be COVID-specific lines, like the likes being offered by SIDBI and NABARD. But say none of these work and you need to find a new lender. Know that the process will be slow, so start now or as soon as possible. You need to make the lenders understand how you are reducing uncertainty and risks in your business. You will likely have an easier time finding supply chain finance or invoice discounting lines, as opposed to a general purpose working capital loan. Look for assets you can offer as collateral. We are now seeing lenders starting to selectively lend to businesses, so cast your net wide. Start as early as you can, ask as many lenders as you can, and make them see what you understand about your business, that you will overcome risks and make enough cash to return their loan on time. That's what all funders are looking for. Thank you.